welcome to Funded Futures. My name is Emily Macfarlane. I'm your host, and today I've got with me Darren Westlake, who is the co-founder and former CEO of Crowdcube UK. Welcome to the podcast.
Thanks, Emily. Nice to be here.
Thanks so much for coming all the way from the UK.
All the way.
How's it feel?
Yeah, great. It's nice to be here. Yeah, never been here before, so it's all new to me.
I feel like you've given us a bit of a weather change over here. We've had such a beautiful summer, and now it's a bit rainy, a bit cold.
No, it's cold on the way here.
Oh, you got so
I thought about putting a jacket on. I thought, can't. I'm in Australia, but I wish I did actually.
I can't believe it's the first time. What have been the culture shocks for you?
Good question. Yeah, I think just the weather. One thing, I was just really surprised, expecting it to be really hot. Mm-hmm. But I love the place. It's just such a variety of different influences, isn't it? So you've got the old and the new together, and then you've got kind of Asia, and you've got the US, and you've got Europe all kind of mixed into one thing. Yeah, really unique city, unique vibe.
Yeah, we're strange people over here, that's for sure. I mean, there's a few similarities. I think we tend to copy everywhere else because we are so small.
Yeah.
So it's been interesting. I mean, if you look at Birchal, we've been heavily influenced by Crowdcube. I think it's really exciting and probably for you a bit interesting to come in and have a look at Birchal and the equity crowdfunding landscape in Australia as a whole and see the similarities. What have been the biggest similarities that you've seen so far, and then the biggest differences?
I think there's so many similarities. It's amazing that, even though we're thousands of miles apart and we've evolved kind of separately, the way that we do things and the operational processes all seem incredibly similar, which is amazing and makes my job easier to help you guys because we can kind of influence each other much more easily. Biggest difference is, I guess, the stage that the market is at here. So in the early days of Crowdcube, we spent a lot of time trying to convince people that equity crowdfunding was a real kosher way of raising money.
Oh, we're still doing that.
Yeah, that's my point exactly. Is it took us ages to do that, and then we finally cracked it. But you guys that's still a big challenge for you guys, is to convince the skeptics that this is a genuine method of raising money, and it's serious. It's not a scam, which definitely was a question for us in the early days. So you guys are still going through that process of convincing those skeptics. So hopefully I can help with that.
Yeah, absolutely. I think that's the interesting thing, is trying to change people's mindsets. And a lot of people come into equity crowdfunding and they say it's an alternative form of fundraising. Why would I go with equity crowdfunding versus traditional methods, such as a bank loan or a venture capitalist? Why do you think that equity crowdfunding is such a great alternative?
Well, I think it's one of a multiple way of raising money. And when I started Crowdcube, the purpose was always to create a new source of capital for entrepreneurs and give them a choice, because back in the day, you could either raise money from angels or from VCs, and you didn't have a lot of leverage. So when you were speaking to a VC and they gave you a term sheet, you kind of either had to take it or leave it. Now you can say, well, actually, I'm going to leave it because I'm going to go crowdfunding instead, because crowdfunding is a great way to raise money. It's quick, it's efficient, and I end up with a whole load of really bought-in shareholders and potentially customers as well. And I get a load of publicity out of it, and I don't get a director on my board who could influence us in one way or another. So there's so many different benefits to it.
So there's a lot of people who come into equity crowdfunding, a lot of founders that say, I've been told that if I do an equity crowdfunding round now and have CSF shareholders on board, venture capitalists aren't going to want to invest in me in the future. Why do you think that is?
I mean, that was an argument in the early days of Crowdcube as well. And it was just a really false argument that certain people put forward into the industry because they didn't like the idea of equity crowdfunding. And I think they saw it as a threat as well. Even VCs actually saw there's this new kind of disruptor in town, and when they were a little bit worried about it. So a lot of people were putting forward these completely false theories. And the reality is, if you're a brilliant company and you're doing incredibly well, you've got a great product and you're growing really quickly, VCs are going to want to invest in you. They don't care how many people are on your cap table. If it doesn't make any difference to them at all. They're still going to invest.
Absolutely. And I think this is something that I am trying to get across to founders every single day.
Really? It happens every day, yeah?
Oh, yeah. I mean, at the end of the day, venture capitalists are not called venture sharks for no reason. They're trying to set the terms of the offer, and they're trying to essentially get the best deal for them. It's not about the best deal for the business at the end of the day.
Yeah.
So that's what founders
Absolutely.
really need to consider, is that through equity crowdfunding, you're setting the terms of your own offer. You're in control, and you're doing what's best for your business. That being said, sometimes through equity crowdfunding, there's a lot of inflated valuations. Why do you think that is?
In equity crowdfunding?
Yes.
I think that's another difference between how it works here and how it works in the UK. So in the UK, all of the rounds that we do are all led by some kind of institutional or lead investor of some kind, whereby they've already negotiated a price with the founder of the company, and the price is kind of set, and the crowd round follows the pricing already set. Whereas obviously you guys here are at a different stage, and we were like that in the early stage, where the price is set by the founder, and unless they're well educated and they really understand the implications of getting the valuation wrong, they're going to go for the biggest valuation they can possibly get, because they think that they're giving away less equity that way, and they're going to own a bigger chunk of the company. But I think that's a real false economy. I think that trying to raise the money as part of the crowdfunding round is going to be harder at a higher valuation.
Totally.
And then if you don't hit all the milestones that you've got in your plan and grow the business as quickly as you say you're going to grow it, when you try to raise money in future, it's going to be much, much harder, and you're likely to have a down round, which is going to be really detrimental to your business. So getting that pricing right is so important for the company themselves.
What's your advice for companies who are potentially valuing their company for the very first time?
It's a difficult one, isn't it? I mean, there is no real science to it. And often it's about, okay, how much money do you want to raise and how much equity do you want to give away? And it's a factor of those things, and you need to do that kind of calculation. But you need to be realistic, and you need to think about, put yourself in the shoes of an investor. What does that offer look like? If I was to come and invest in my company and I'd valued it at X, is that realistic? Is that going to be exciting for them to do that?
Yeah.
So yeah, it's about taking an outside view on it and making sure that it looks sensible.
And from a perspective of raising for the first time with equity crowdfunding, how much would you say is a normal amount of equity in terms of a percentage to sell in a company?
It depends of the stage of the company, but I mean, you're looking at 10 to 20%, I would say, at the kind of seed to Series A kind of stage, that kind of level.
And how do you think that companies can set themselves up so that subsequent rounds are successful as well?
It is about doing that, but it's about getting that valuation right, because the chances are you are going to have to raise money in the future. I mean, everybody will have a business plan that says, oh yeah, we're never going to need to raise capital again. We're going to be profitable in a year's time. But the reality is that most companies, most high growth tech startups have to raise money again and again. So like we said before, it's about getting it right from the start, getting that valuation right, and not being greedy as well, because you don't need to be. If you normally, founders have a big ownership of the business from day one, and if you think you're going to make the company a unicorn or worth hundreds of millions of dollars, then you don't need to have a big chunk of it to be a wealthy guy or girl in the future.
Absolutely. So circling back to what you were talking about before, and having potentially thousands of people on your cap table, that's a key difference in the crowdsource funding regime in Australia versus the UK. So originally I know Crowdcube started with that kind of structure that every shareholder would come on as an individual. And now you've converted to a nominee structure where it's like a special purpose vehicle. So it's all the CSF shareholders are represented as one nominee on the cap table. What do you think the benefits are of having the nominee structure versus having individual shareholders on the cap table?
I mean, from the investor's point of view, there's not that much difference. I mean, you end up, you're a shareholder in the company in some form or fashion in either structure, and you own those shares, and you'll benefit from the shares financially in the same way. From the company's point of view, it is slightly different. So to have a simplified cap table, have let's say 10 entries amongst the kind of various friends and family and maybe another fund or whatever investing, have the 10 entries and just be able to deal with that on your cap table is quite simple versus having 1,000 of them.
Sure.
But you still need to be able to communicate with those people. You still need to, you can't just send one update to the one entry on the cap table. You need to send updates to all of your shareholders and build that relationship, because quite often the investors are already somehow related to the company. So they might be, followers on social media, they might be existing customers. And if they are your customers, you really need to stay in touch with them, because you want them to be repeat customers and happy customers. So you need to build that relationship. So I don't know, at the end of the day, there's not a huge amount of difference between it, and they both work quite well, actually.
Yeah, so you think that rhetoric that is coming from VCs, in that, it's not desirable to have a multitude of investors displayed on your cap table, is BS, essentially? Yeah.
If you look at the biggest private companies in the world, they have massive cap tables, and they haven't done equity crowdfunding or crowdsource funding. They've been through so many different fundraisers over so much time that they just accumulate this huge cap table anyway. So lawyers and corporate financiers are used to dealing with large cap tables, and whether that's 100 or 1,000, it doesn't make a lot of difference.
For sure. I feel like there's a lot of myths that surround equity crowdfunding because it is so new, and I think a lot of them still exist in Australia versus in the UK, so you're quite lucky. But what do you feel like were the main barriers to entry to really making it a mainstream product?
I think proving that it works for the best of breed, the best startups that are around, because I think you guys have mentioned it in the last couple of days about how people see equity crowdfunding as the lowest form of finance, or the last resort of finance. And that was definitely the case for us. And it's about proving that is not necessarily the case. It's a different form of finance, but it stands equal with all of the other types of finance. And you can, like I said before, you can pick and choose, and you can have them together as well. So you don't have to, it's not necessarily one or another. A lot of the rounds that we do with Crowdcube in the UK, they've got a VC involved, they've got some friends and family, they've got crowdfunding. They use all the different sources as one round, because they're raising quite a large amount of money, and there's benefits and drawbacks of all of the different types of investor. But coming back to your point, what the kind of game changer for us in the UK was having some VC-led deals into some of the hottest startups in the scene at the time that all the VCs in the market were all trying to get into. And that company was on Crowdcube, and people were going, holy shit, this is amazing that, the Crowdcube and crowdfunding can be used for these status of companies.
Yeah.
And that was a game changer.
And what have been some of the biggest success stories that have come through equity crowdfunding in the UK?
So there's two or three kind of big ones. So Brewdog, which is a beer company, they went from a tiny little company in Scotland to one of the world's biggest brands. Certainly, I think they've got 50 or so different bars in the UK, and probably 50 outside of the UK as well. And they're a unicorn. They've had a $1 billion valuation not so long ago. And they've done multiple rounds of crowdfunding, not only on Crowdcube a few times, but also on their own site as well. And they were really, really good at understanding the relationship of their investors tended to be customers as well. So they gave away rewards. So if you became an investor in Brewdog, you got a little card to say that you got a 10% discount for the rest of your life. And I did that in their very first round. So I've got, I think I put 100 quid in, and I've got more than 100 quid's worth of value back from that discount card.
Yeah.
And then the other kind of big, kind of what we call like lighthouse rounds for us were the likes of Revolut and Monzo, which were the digital banks that came out of the UK. And they've gone on to be unicorns. And Revolut's now worth, their last valuation was $45 billion.
Wow.
Yeah.
So what does that mean for early stage investors who got in at, say, the first crowdfunding round?
Yeah, so when they came to us, they were a year or two old. This was in 2017, and they were doing their Series A, and the VC that invested in Crowdcube, Bolton Capital, were leading the round into Revolut. So that's how we got to know them. So Bolton referred it to us, and they understood early on, again, that the idea of crowdfunding can sit alongside a bigger kind of VC-led round, which is what happened in both cases. But what they wanted to do was get customer engagement and customer acquisition as well, because Crowdcube at the time had 1 million members, and they were appealing to our 1 million members to understand Revolut and its benefits and become a Revolut customer. Actually, they did a really clever thing, was to invest in Revolut, because everybody wanted to, because they were the hottest startup around. You had to open an account with them, and that wasn't enough. So you had to be a customer in the first place, but then you also had to get 5 other people to join before you were allowed to invest. Oh. So they were using it as a really strong mechanism to drive new acquisition of customers.
Interesting. How did that work?
It was all built by them in their technology, and so you would send a code to somebody, and when somebody signed up with that code, it was attributed to your account. Mm-hmm. And then as soon as you had 5 referrals, your name was added to the list, which allowed you to invest through Crowdcube. So there was a private portal. Ooh. We whitelisted all these certain usernames, and only they could invest.
That is so clever.
It's very clever and very annoying, because I couldn't be bothered to do that. So I didn't invest in Revolut, and you asked me kind of what they've gone on to do. So if you invested £2,000 in Revolut at that time, and their valuation was £40 million, and as I said, they're now worth $45 billion.
Still pretty big.
Yeah. £2,000 is now worth £1 million.
Sweet Lord.
So there are multiple millionaires coming out of that round.
That is insane.
It is insane, isn't it? Yeah.
So you're quite filthy about it, obviously, that you didn't get involved.
Yeah, it's horrendous.
I like to think of it as, you know how there's like a fantasy league football team? It's like your fantasy portfolio.
Yeah.
Of the things you could have gotten involved in if you didn't. That's number one in yours.
Yeah, that one really hurts. Yeah, and it hurts even more because my co-founder Luke did invest in it, and he never fails to tell me about how much his shares are worth.
Oh, that's what a treat! What a treat!
Yeah.
Oh, that would absolutely kill me. Sorry to re-traumatize you. I didn't mean it, but it's pretty crazy to think of that. And I imagine in the beginning there are a lot of people coming to you saying, you know, a lot of these companies are failing, and that's pretty common. A lot of small businesses do fail, so it is a high risk investment at that point. And it is interesting trying to educate retail investors on what their investment actually means, how long you'd hold that investment for, and what illiquidity actually means as well. Because I think particularly in Australia, and you can tell me if it's the same in the UK, there's not a lot of education around what types of shares are, and you know what a privately listed company or a publicly listed company is, or what, you know, there's no education. Yeah. So everybody's going in absolutely blind, and they say, okay, what's my return on my investment? For me, that's such a crazy question. Yeah. It's like going to the TAB and saying, hi, I'd like to bet on this horse. Okay, so these are my odds, and then getting angry when that horse doesn't win. Yeah. It's so bizarre to me. It is. So what do you think the key things are that people need to understand when they're investing in a company through equity crowdfunding? Yeah,
you're totally right. And you know what we're trying to do, both Birchal and Crowdcube, is to create this new source of finance and democratize investment and allow ordinary people, allow anybody to be able to invest in this asset class, which is startups. And if you're going to want to do that, then you have to take the responsibility to make sure that those people actually understand what this asset class means and what the pros are for it and what the cons are for it. So we made a lot of effort to do that education, but it's a lot of work to do that. And in the UK, we had 2 big platforms, and between us, we were educating the market. Here, there's pretty much just you guys. You've got like 70%.
There are other ones.
Okay, there's some smaller ones as well. But between you, you know, your responsibility is to do that as well, and it's even harder if you're if it's you doing it pretty much alone. One of the things that we had to do as part of the regulations was when you join Crowdcube, you have to take a questionnaire, which asks you questions about your understanding of equity crowdfunding and the nature of investing into startups. So it talks about the illiquidity of your shares. You know, the chances of you being able to sell your shares is pretty slim. The risk of startups, you know, as you just mentioned, you know, a lot of startups do go bust, and they have to pass this questionnaire before they're allowed to invest. So it's a blocker for us because we know that certain people get put off by having to do this questionnaire, but it's also heartening for us to know that anybody who's been through that has demonstrated they do understand these things.
Yeah.
And they're much less likely to come back to us at a later stage and go, I had no idea I wouldn't be able to sell my shares, or no idea this startup could possibly fail. So, I mean, that does happen. Let's don't get me wrong. People do say that. And, you know, they'll say a year after investing, why haven't I got my money back yet? And you can't get rid of that completely. But I think having a questionnaire and doing education can help get around that massively.
It's an interesting one as well, because obviously if you were to invest in, say, if you're investing in a company on the Australian Stock Exchange, your shares, whilst liquid, fluctuate massively, and you could end up losing it all at the end of the day. And I think that people fail to realise that. They think that just because it is liquid, they are having less risk, which is not necessarily the case.
Yeah.
It's a shame that there is such a steep learning curve for so many ordinary people. And certainly for me, I think it's been interesting working at Birchal for all these years and understanding what illiquidity means and what a medium to long-term investment actually means as well.
Yeah.
So I think it's a great thing for people to be able to see what Crowdcube has achieved in what is relatively a short space of time for a business. What do you think you learnt from the early years in Crowdcube that you applied to, you know, build Crowdcube and get the industry to be so successful and big in the UK?
I think the thing that we struggled with in the early days was the kind of the chicken and the egg situation. So do you focus on acquiring companies and getting more companies on the platform, or getting more investors on the platform? And you know, you can't. When we started from day one, we had an empty platform. So we're like, okay, where do we start here?
So it's a marketplace of sorts.
It's a marketplace, exactly. It's a two-sided marketplace, and you need to try and keep the marketplace in some kind of a balance. And we still struggle with that, and it sounds like you guys do as well. It kind of fluctuates, doesn't it? But the very first company that we funded, I told the story in the Birchal office a couple of days ago, was a company called Bubble and Balm, and they came to us, and they weren't. These days, I'm not sure if they would get through our vetting processes. The standard of companies we had in the early days was really quite low. But Bubble and Balm was one of the better ones. So they were a luxury fair trade soap company, and they were the lovely founders. And when she came to us, she was trying to raise 75 grand, and she had, I think, about 40 grand of it already raised from 2 or 3 angel investors that had shown interest. So she needed to get to the 75k because that was the meaningful amount of money that she needed.
Right.
So we listed her, and it took 3 months to raise 75 grand, which is insanely long time.
So long.
But it was exciting to prove that equity crowdfunding could actually work, and we hit the target. And what we realized when we started to do our next campaign was that those investors who invested in Bubble and Balm were invested in the next one, and they were those angel investors who came with Bubble and Balm invested in another pitch, which was completely unrelated. They just liked the look of it. So we're like, okay, the company brings investors with them, and then they start to invest in other things. So that chicken and egg situation means the starting point is actually the company, because the company is not just a company, it's company and investors. And that was the thing that we learned quite quickly, and I think we learned it quicker than our competitors, was the focus has to be getting the best companies you can, and companies that bring investors with them. And that makes the wheel turn quicker.
Yeah, absolutely. So you mentioned your vetting process, which I'm intrigued to unpack a bit, because I managed to score a 1-star Google review for Birchal for a sales call that I had, where I had a chat with a founder and asked my normal questions. So my normal questions are, you know, tell me about your story, because storytelling is a massive part of crowdfunding for sure. You really want to resonate with an audience. Yeah. I said, tell me about your valuation. Didn't have one. Tell me about how much you want to raise. There wasn't a clear use of funds. There was just a lot of gaps, and I gave some advice on, you know, how this founder could go improve the company and get it to a point where it was not just eligible but suitable for equity crowdfunding and would have a better chance at success. This founder did not take it well. said I thought I was on Shark Tank and left a 1-star Google review for Birchal. But it was something that I stood by and I said, I've done this for a number of years and I know what works for Australia in equity crowdfunding. What do you look for when you're trying to find a company that's going to have a successful crowdfunding raise on Crowdcube?
I think it's similar to you guys. It's understanding what investors are going to want from a company. So what is the appeal to an investor? And valuation is a big part of that. Am I investing in a company that have got their valuation set correctly? But these days in Crowdcube, we're very much focused on companies that have an audience and that have a community. We use the term community funding a lot at the moment. So it's about finding those companies that understand that dynamic of having, whether it's a social following or whether it's actual customers, it doesn't matter, but people who are already part of your network and engaging them and getting them to help turbocharge your company. Because not only do you get the funds, but you also get a whole host of loyal followers who are advocates and evangelists for your business. They drive awareness, they drive new customers, they become repeat and loyal customers themselves. So we really look for those kind of companies that have those kind of followings already, because the likelihood of success is that much more, is that much higher. And at the end of the day, as you said, it's in everybody's interest to make sure you pick the companies that are going to be successful, because it's to nobody's benefit if they're not successful, right?
Absolutely. And I think that's the thing. At the end of the day, I don't want somebody wasting their time and their money, because it does cost money to run an equity crowdfunding. It's money and it's a lot of time as well, yeah. Exactly. And time is money.
Yeah.
Do you really want your entire team working on something that's not going to be successful?
Yeah.
I think that was the frustrating part of the story for me, was that I wasn't turning somebody away because I'm mean. I was giving them advice so that hopefully if they do come back to equity crowdfunding, they're more prepared and they're going to have a successful time. Because at the end of the day, when we say no to companies, it's not because we don't like them. It's because we think that there are certain elements to their current structure that need tweaking to get them in a better place to be able to raise capital from the crowd.
Yeah.
And having a crowd, unbelievable. But that, at the end of the day, a lot of the companies that we see are pre-revenue, pre-launch. But you need to have a few things. I need to be able to see a website.
Yeah.
I need to be able to see that you have registered your company.
Yeah.
You wouldn't believe how many we see that say, so I have an idea. So I'm probably not your girl to talk to at the end of the day.
Yeah.
Do you get a lot of people who come to you who are too early stage?
We do, and we get a lot of those kind of come through the inbound from the website, and they're quite quickly sifted through and sifted out. So we definitely have a lot of those people, and it's hard turning them away, isn't it? But it is actually the right thing to do, and we would absolutely fund them if we could, because that's our job, and also. It's also our purpose, what gets me out of bed in the morning, kind of less so these days because I'm not so heavily involved. But what I used to talk to our team about at Crowdcube was we make a massive difference to companies. And if you go back and speak to the companies that are funded through our platforms, they will say quite often, if you guys didn't exist, then we wouldn't exist either. And isn't that an amazing thing to feel, that when you get out of bed in the morning, you're going to make that level of difference to people in the world.
This is why I work at Birchal, genuinely, because it is so rewarding to see so many of these companies that have not been able to raise capital otherwise be able to raise capital through Birchal. And it's incredibly rewarding when you work with them.
And let's be honest, right? Most companies aren't going to be able to raise money from VCs. And the VC industry is huge in the UK. There's literally hundreds of VCs, but they invest, 10 times a year. It's not many companies. You've got to be the best of the best to manage to get VC. And there's hundreds of thousands of companies that are looking for funding every year. So most of them aren't going to get VC funding. So that's why we exist, is to give them an alternative.
Yeah, absolutely. So Crowdcube now has actually benefited from Brexit, isn't that right? So you're not just in the UK.
Yeah.
You branched out. How does that look now?
Yeah, so I'm not sure we benefit. I'm not sure anybody's benefited from Brexit, actually. But we are operational in Europe as well as in the UK at the moment. So we have an office in Barcelona, and we have Actually, our main office is now in Paris, so I think we have about 10 people in Paris. And from those 2 locations, we can service most of Europe. So we do get companies looking to raise funds from across Europe, and we service those through those two locations.
That's pretty huge. When did you notice that there was that opportunity to branch out to new markets?
Well, I mean, it was always attractive to us, but as usual, it's kind of ruled by regulation, and we are waiting for the regulation in other places around the world, and Europe in particular, to catch up with the UK to make it possible to do what we do. And I'm trying to remember what the date was. It was about 2019. Equity crowdfunding in Europe became under one law. So there was before that it was very patchy. So one country would allow it and one company would completely disallow it.
Yeah, right.
And then there was this harmonization of law across the whole of Europe. So as long as you complied with that law and you were regulated under that law, you could operate across the whole of Europe. So that was the game changer for us. And we were already operational in Spain, which was a pioneer in equity crowdfunding, and they had regulation way before the rest of Europe did. So we used that as the way to kind of springboard into the European regulation and be operational Europe-wide.
Oh, that's brilliant. Yeah. But it's not just a one-dimensional model now. You're kind of going into that hybrid model with angel syndicates coming into equity crowdfunding.
Yeah.
Do you see that being a big benefit to equity crowdfunding in the future?
Well, I think that's always kind of been the case. Like my example with Bubble and Balm is that angels were investing from day one. And whether that's individual kind of loan angels or syndicates or angel groups, I think they are an equally important part of the mix of funding options for entrepreneurs. And I think it's important that that mix kind of exists and that there is a complete range of different options for people looking to raise money.
It is interesting. I think that's probably one of the key differences that I've noticed in Australian equity crowdfunding versus in the UK. Is I think we do have a smaller pool of investors versus what you would have access to in the UK.
Yeah.
And we don't necessarily look for companies coming in with cornerstone investment to begin with. Ideally come with a crowd already.
But there's fewer of them, right?
Yeah, exactly. But the overwhelming majority of investments through Birchal come from retail investors.
Okay.
How do you see that changing, or do you not see that changing in Australia in the future?
Hard to say. I don't know the market. I've only been here a few days. So I don't really know.
That was a really unfair question.
It depends how the market evolves. But I think what will happen is that the cynics in the market, which are probably the VCs and maybe certain angels who have had the opportunity to themselves for far too long, and will suddenly start to see the benefits of what you guys are doing, what equity crowdfunding can do. And what we've actually seen was people became proponents of equity crowdfunding, and they were encouraging. We've got certain VCs in the UK that encourage their portfolios to use equity crowdfunding, and some of the kind of super angels do the same. They really understand the benefits of it, and they see the turbocharge that companies get from using equity crowdfunding. So again, that it's all part of one mix. So hopefully that will happen here as well. I'm sure it will.
I mean, we can only hope.
Yeah.
And what do you think are the key regulatory changes that need to happen here to get to a stage where it is as profitable and exciting as the equity crowdfunding scene in the UK?
I don't know that's a limiting factor, is it? I mean, tell me if I'm wrong. I don't know the regulations here that well, but it feels like the regulators are forward-thinking and open-minded, and they are encouraging of what Birchal does. So it doesn't feel like that's necessarily a limiting factor, although there is a limit to the amount of money that can be raised, right?
That was exactly what I was about to bring up.
Okay.
So it's $5 million per calendar year that any company is able to raise through equity crowdfunding.
Yeah.
So say, for example, if you're going to do 2 rounds in 1 year, in 12 months, and you raise $3 million, you can't go and raise $3 million the next time. You can only raise up to a cap of 2.
Yeah.
Which can be limiting.
But I guess most companies don't raise twice in a year. I mean, you're probably doing something wrong if you're having to raise twice in a year. But it does limit you to the size and stage of company that you can appeal to. So a lot of the bigger raises that we did were way bigger than 5 million Aussie dollars.
What's the biggest you've ever done?
So we did 20 million pounds, so 40 million Aussie dollars for Monzo. Yeah.
That's huge.
It's huge, isn't it? Yeah.
And did that take a lot of preparation, and was it different from a structural perspective to do such a large raise?
Yeah, it was very different because there's a limit, just the same way that you guys have got a limit. We have a limit as well, which is higher. It's 8 million euros.
Okay.
But they wanted to raise 20 million pounds, which is more than double that. And the only way you can do that is to do what's called a prospectus, which is an offer document, I suppose, which is equivalent to what you would use if you did an IPO. So it's this huge undertaking, and it's a very costly undertaking. So Monzo spent £500,000 putting that together to enable them to beat that limit and to be kind of exempt from that limit. So yeah, it was a huge amount of work, but they raised £20 million from 36,000 investors.
That is wild.
Yeah.
And obviously worthwhile, spending the $500,000 to get the prospectus done.
Yeah, exactly, yeah.
I think what I've learnt from working with founders over the years in Birchal is a lot of founders find the capital raising process to be quite arduous, time consuming, all consuming, in fact, at the end of the day. And for me, looking at how an equity crowdfunding round works versus trying to raise capital, from a VC, equity crowdfunding is so quick.
Yeah.
It's so much more simple. It's a lot less time intensive. Do you feel that that's truly the case for what you've seen in the UK as well?
It definitely is. I mean, there's no easy way to raise money. All ways of raising money are hard and stressful. And I can tell you that from experience because we did 7 or 8 different raises for Crowdcube over the years. It was like every 18 months we're raising, and we raised from VCs and in the early days from friends and family, and obviously we did crowdfunding every time we raised as well. And it's always hard, and it always takes longer than you think, and it's always more difficult. But the thing about crowdfunding is that, I mean, on our platform, and I think on yours, almost all of the companies that do it are successful because we now know, as we were talking before, we now know what kind of companies are successful, and we politely tell the ones that are not going to be successful that they probably shouldn't do it either at all or not for now. So if you do come on a platform, your chances of success are very high, and the criteria and the timescales for doing that, which in the UK it takes a few weeks to prepare yourself, a couple of weeks to raise the money, and then 2 or 3 weeks to close the round. So it's probably like 3 months in total, which is relatively quick, isn't it? Because big VC funding rounds can take a lot longer than that. And that level of certainty is really important to an entrepreneur, to an operator, because you need that capital. And if you don't raise the capital, the company could go bust. You could run out of cash. Whereas there is a bigger level of uncertainty if you go through a VC and you've got one VC who said they're going to put in a check for £5 million, and they take you through the whole DD process, and then for some reason, and this happened during COVID, they decide to pull out. And at that point, you've got a couple of quid left in the bank, and you've got nobody else lined up behind them because all the other VCs pulled out ages ago because you've committed to this one, and suddenly you're left in limbo. So it is a dangerous way of raising money.
I hear that story time and time again. And interestingly, even through equity crowdfunding, a lot of the time you have time wasters and tire kickers who come through and they say, yes, I'd love to invest $100,000, and the investment offer will be open for 2 weeks and it never comes in.
Yeah.
Why do you think that these investors do this?
Through the platform?
I mean, in general, VCs as well. Why do they play this game where they say they're going to invest and then they pull the rug out from under you?
I think the individual investors, they like the feeling that they are a big time investor, and they can brag about it to their mates, even though obviously it doesn't end up happening. And I don't think they think through the implications of doing that, which can be quite horrible for the companies. VCs, I mean, I talked about them pulling out. It doesn't happen that many times, but it is a risk. And we live in uncertain times, and it's been uncertain times since COVID, really. And there are events that happen in the world that mean that suddenly there's a change in thesis and a change in attitude from VCs, which suddenly means, okay, we're not going to do as many deals this year as we said we were going to do, so we have to pull out of some of them. So that can happen. And VCs, the majority of times, they understand the implications of doing that, and they don't want to do it, and they've got a reputation to uphold as well. But it can happen.
Sure. So for founders who are listening to this and thinking, I really want to go through equity crowdfunding to raise some capital, what advice would you give them?
I would say make sure you do your preparation and work closely with you guys, with the platform, and take all the advice from you, because you've done it dozens of times and you know what works. So listen to the platform, follow the advice, make sure you get your preparation, get everything lined up, and then execute on it. And if you do all that, it will work. That's the best advice I can give.
Music to my ears.
I bet it is, yeah.
Thank you so much, Darren, for coming on. I feel like
there's
so many key takeaways and a lot of inspiration that founders can take when raising capital. So I really appreciate your time.
Thanks.
And thanks for coming to Australia.
Yeah, no worries. I enjoyed it.